Ever wondered why price bounces off certain levels over and over again? That's no coincidence. It's support and resistance. Hi traders, welcome back to the channel. In this video, we're diving into one of the most powerful concepts in technical analysis, support and resistance. Whether you are a Forex trader, an indices trader, a crypto trader, mastering this concept can seriously improve your edge. So in this video, we are going to go over what is support and resistance, how to identify them, and also how Flux Charts can help you identify them on a much simpler way. Alright, so what is support and resistance? Support and resistance are key levels on a price chart where price tends to pause, reverse, or break through. Alright, so what is the difference between support and resistance? Support is a price level where a downtrend tends to stop because buyers step in, creating demand. Think of it as a floor. Price drops, hit that level, and bounces back up. Vice versa with resistance. Resistance is the opposite. It's a price level where an uptrend stalls because sellers come in, creating supply. It acts like a ceiling. Prices rises, hits the reversal level, and then falls. There is a few types of support and resistance we can look at. The first one, if you have a price ranging in here, for example, if you have price ranging like this, each time this price touches, for example, here, 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 and even down here, it's like if you are at the bottom, this is going to be the support, it's like a floor, and this is like the ceiling. So the more touches, the more confirmation we have as well that this is a stronger level of resistance and support. Now there's two ways we trade support and resistance. We can have one where we play the price is doing this, and then we can also have a breakthrough, and then we wait for the retest of this level. So now this resistance becomes support, and then price moves up. Same if we go from this way down. If price breaks through this level and it comes up, the support now turns into resistance, and then price can move down. You can see support and resistance in a whole lot, even in a trend line. For example, if you have price doing this, each time it touches, you will see a lot of the time trend line traders, price breaks through, retest, and then move follow. So this is your support, breaks through, turns into resistance, and then we have a move further. So we are going to jump on a few examples, and I'm going to take you step for step through it. So here you can see we had price touch there, we had multiple touches. In this case, you will see it's a price ranging. So each time it touches, it confirms the validity of resistance support. When we go back, you'll see each time, like I just said, this is just a nice line chart explaining to you what it is and how it looks. So here you can see price is most likely to do this. We are going to wait for price to create a zone on where these levels are. As you can see here, price broke through, we had a touch there, price broke through, we had a touch there. In this case, this can be a double top. Price broke through, this resistance became support now. Again here, broke through, and this support became resistance now. So there's a few ways you can look at it, and you also just use it as a confluence in your trading strategy that you have, or your entry model for that sense. And this is a good way you can do. Now, support and resistance, the way we do this is, remember the touches I said, right? Now, let's say we have a zone like this. This is the market. We want price, wherever price reacts from a zone. Let's just make this different color quickly. So let's say this is a zone, right? Let's just draw this out. This is a zone. So we had a touch there, we had multiple touches here, broke through, retest here, and we're back in the zone. So now instead of drawing support and resistance like a straight line, we create a zone of where the reactions can take place. I'm going to show you in a few examples. You can use the straight line as a nice way of seeing it, but then you need to refine it into zones. I found that works a lot better. So the way I always draw out support and resistance, I always go to the line chart first. So I change the candles to line charts. This just identifies a little bit easier on where you can see the touches and where you can see the reactions from. Like you can see there's a bunch of touches right over here. This one alone, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13 touches just on this level. Same right over here, 1, 2, 3, 4, 5. Same right over here, 1, 2, 3, 4, 5. Right over here as well, 1. Broke through, 3, 4, 5, 6, 7. So I always go to the line chart to make this a little bit easier for myself. Alright, so this is just a little bit zoomed in. It's the same picture as this one, just a little bit zoomed in, and you can see all of these touches. Alright, so this is the candle chart of this line chart right over here. So I just switched it to candles, and now you can see a little bit better with the candles, the touches. If you go to the line chart, how more cleaner it looks when you do it on the line chart first, and then you go to the candles. Look how price respects these levels, even right over there. Look there, broke through, retest. So this is why I always go to the line chart before I go to the candle chart. Okay, so here you can see I drew out zones. Now how do I draw out the zones? I draw it from the wick on where that first touch is onto the body of where the next one is. But there's no right or wrong way how to draw this. You need to go play around and see which one suits you the best. Like you can see this zone is a lot bigger than that one, because it was where you see here, this wick touched in the zone, this wick's created the zone, there was a small touch, there was a touch, there was a touch, there was a touch. So it's all about going. So let's say, for example, if we need to draw out a zone right over here, I will take it from this wick all the way to the right, and as you can see there, it retested. So this whole zone will become a support and resistance level right over here, this zone right over here, and you can see how it reacts from that zone. So yeah, again, here's another example with the zones. Like you can see here, if I zoom in, I draw out from this week, there we broke through, price played around inside of the zone, broke through, retest to the pip, that top part of that zone right over there. When we came through to this zone, played around, we came back all the way up there. So you'll find price loves to trade between zones, like from this zone to this zone, from this zone to this zone, from this zone back down, from this zone back down. Price likes to trade from zone to zone to zone to zone. So what price tends to do, price will trade, break through, maybe come back, go again to that zone, and it goes up all the way up till this zone right over here. So each zone, price likes to bounce between zone, 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 zone. Okay, so here's an example of the same chart, but on a lower time frame. And this is where you can start using some of your entry models. Depends which ones you use, but here you can use some of your entry models. So for example, on this one, you can see price retraced into our zone. We had a liquidity sweep right over here. And then as well, there was inverse fair value gap right over there. Price broke through, you got your entry, and price went to the next zone. Now price is at this zone. Again, follow your entry model. You have a liquidity sweep. There's an inverse fair value gap right over here. If you are unsure, you can wait for a market structure shift right over here. Price came down, retested, took liquidity here again, and price reacted from this nice big order block right over here, and price went down. Let's say you did not catch that trade again. Price came up, we had a liquidity sweep, we had an inverse fair value gap, price broke below it, enter, and you go down all the way to this one right over here. Same here. Price entered our zone, close to our zone. We had a liquidity sweep. We had an inverse fair value gap zone right over here. Price played around, you entered your trade, and it went back to the next zone. Exactly same right over here. Broke through, had a retest, we took liquidity here again. So we can see we are on an upside move. In this example again, we had an inverse fair value gap. This is where the zone is. Enter your trade and we go to the next zone. So you draw out these levels on the higher time frame and you enter on your lower time frame entry models. That's how easy this is. Now, why does support and resistance matter? Support and resistance are crucial for one big reason. They guide your entries and exits. Let's say price is approaching a resistance. Are you going to buy into a wall? Probably not. Instead, you might wait for a breakout or sell from that level. Same with support. You can catch a bounce or look for a breakdown. Alright, so the next part of this video that I'm excited about is using an indicator by Flux Charts, support and resistance multi-time frame by Flux Charts. This is a complete free indicator. All you have to do, you need to type in support and resistance by Flux Charts on TradingView. These are the settings I use as well. Your pivot length, so the lower it is, the more lines it shows, the higher it is, the less lines it shows. Strength as well, the lower it is, the more it shows, the higher it is, the less it shows. Here you can choose your invalidation model. I like close, expand lines and zones, so I only use this one, show invalidated. And here you can choose as well, you can choose literally 3 time frames on what you want to see these levels. I chose for this example the 30-minute, but you can choose, for example, a 4-hour level right over here, a 1-hour level right over here, and then you can choose, for example, a 30-minute level right over here. So here you can show your breaks, you can show the retest, you can avoid false breakouts. I keep this standard as it is, inverse color after broken, and here you can choose your styles. So let's have a look on a chart how it looks. Alright, so here you can see this is everything the indicator. I did not draw out a single line. We have our support and resistance. For example, your red will be your resistance, your green will be your support. Then as well, the R stands for test, like retest. The B stands for breakthrough. Same with this. If it's green, it comes from the bottom. If it's red, it comes from the top. So here you can see there's 1 touch, 2 touches, 3, 4. Here's another one. It shows you the touches. 1, 2, 3. Here's your touches. It shows it to you. Literally, I didn't draw out one single line. As soon as we have a breakthrough, you will see in this example, a breakthrough, this level right over here broke through this level. It broke through this level. And then it went straight to the next one. Came back for that retest, come back down again. Came back for that retest, down again. Broke through this level, came down, retested it right over here. Here's another one. Price broke through, jumped to this zone, came back like this. And as you can see, this is what price is currently doing. Here's another example. So you can see as soon as support and resistance changes, like resistance turns into support and support returns into resistance, this same line will literally change color. Like here you can see from the red to the green, from the red to the green. So here you can see as well, price came, tested this level, came down, tested this zone right over here, went back up, came down, tested this level, retested there. We had a breakthrough right over here, came back for a retest, broke through, came back for the retest, and we went up. So now price is doing this. Here again, there's a nice entry model, liquidity sweep, inverse fair value gap, plus a fair value gap, plus an order block, and it's probably on the 78 OTE level. Price comes down into this level, retests, came back again, a liquidity sweep, broke through this level here. It's indicating that it's had a breakthrough, and we had our entry models right over here. Yes, sometimes this indicator is not going to be perfect. It depends on your settings that you do, but here you can see there's another level right over there where price reacted from, broke through, retest, and here we have our level here again, broke through, retests, and here we have a nice entry model right over here. We had a nice big order block. We are inside of our OTE level. We had a nice big push. Again, we had a liquidity sweep right in front of that push. We had a inverse fair value gap right over here. Price came down, retest into our level right over there on a 4-hour chart. So here you can see these levels are 4-hour charts, but I am on the lower time frame, and this is where this setting helps you. So 4-hour, and then if you wanted to show the 4-hour, and then you can go to the lower time frame to find your entries. All right, so don't forget, if you want help with your levels, support and resistance by Flux Chart, go have a look. Drop a like if this helps, subscribe for more trading tips, and let me know in the comments what strategy you want me to do next. See you in the next one. Cheers.